everybody, Jay here. Welcome to the channel. It's been a while since I've done a new video. I apologize. It is not because I've been afraid to show my portfolio during this market. It's been a crazy market. It's just that other things in life have gotten a little busy. But now that I am self-quarantined and just sitting around the apartment, I'm taking the time to do a few more videos. So what I wanted to do, just kind of jumping back in with my videos, is give you guys a quick level set on where my portfolio is. The last time I had done a comprehensive portfolio overview was January 21st. So needless to say, there have been some significant changes since then. So I'll just wanted to walk you guys through where I'm at. It's on January 21st, my total portfolio value was $873,000. And if you guys remember correctly, I don't include the cash in my total portfolio value in that video because a lot of that cash is cash that I have set aside for near to midterm living expenses, etc. So I don't consider that investable money. A context for you guys on this video is I have a bit more of investable assets sitting in cash right now, about $20,000 worth to be exact. So if you take a look at my holdings, if we reduce the cash down to $20,000, my total portfolio right now is at $764,000. I've taken a hit, but I have put in some new money as well too. So my returns, while they haven't been quite as bad as the overall market, and I'll get into why in a little bit, they haven't been as positive as maybe this total would make it appear. So let's jump in here. I just kind of want to walk you guys through. These have been my changes to my portfolio since that last video. First of all, the total value, like I said, has gone from $873,000 down to $764,000. So I'm down overall $109,000. But I put $63,000 worth of deposits in since then into the account. And so overall, my total return has been minus 19.7%. So if you go, if you look at the overall portfolio, the overall market, you can kind of see, bear with me. Oh, that. And then the other change has been that my total holdings have increased from 31 to 35. So I'm going to walk you guys through real quick just what my 35 holdings are at the moment, and I'll give you a little bit of context on each one. So let's start here. Number one is still Amazon. It's actually gone up since January 21st, ever so slightly, by a little less than 1%. But I'll take it. And so it was around 93,000 during that last video. Now it's up at 95. They had an amazing earnings report, if you remember, and their stock jumped about 10%, up to 2,200 a share. And then obviously during this indiscriminate pullback on the market, especially earlier on, they got pulled down a bit. But because they've been such an essential service and platform during this pandemic, their stock price has held up. So that's number one. Number two on my portfolio is Verizon. They were number 4 before, behind Facebook and Google. I actually deposited about $36,000 over that time into Verizon. So their return overall, has gone down, but because I've put such significant deposits into Verizon, they've gone up quite a bit. And the reason I put so much more money into Verizon is, again, as you guys know, I'm very tech heavy, and tech's always going to be the foundation of my portfolio. But I do see Verizon as kind of almost sort of like a bond proxy for me. I think between 5G and their stable source of income, etc., I think that dividend return somewhere between 4 to 4.5% is just going to continue to be a nice, solid source of income. This is cash, which I'm not going to get into. This one is also cash, by the way. I just kind of X'd out or grayed out what the account is. My number 3 holding is Facebook. I've been buying into Facebook in sort of like drips and drabs. I may end up, if they get down below 140, I may end up making a fairly significant purchase with some of the cash that I have. And then, but overall, I've been kind of like investing a little bit into Facebook here and there because I really like their balance sheet. They have a lot of cash on hand. I think their business in the very near term is going to take a hit because both them and Google, I think a lot of the advertising and marketing spends are being reduced by small and large businesses pretty significantly. So I think in the near term, Facebook's revenue is not going to look great, but I think long term, I think they're as solid of a play as you can find. Number 4 is Microsoft. Again, I think they got pulled back a little bit indiscriminately. I haven't been buying into them. I've wanted to, and if they get down below, say, 130, down 140, I may start buying in. But I think Microsoft, while they're an amazing company and they should be the foundation of anyone's portfolio, and if you don't own Microsoft, I think now is a great time to buy into them. Just know that they're still pretty expensive. But I think they're a great foundational stock. But now that I've built up this solid foundation of Microsoft into my portfolio, I've been focused in other places. Next is Goog. As you guys know, I own Goog and GOOGL. So overall, I own about 47, 48,000 worth of Google, which makes them my number 4 holding. Again, I see them in the same light as Facebook. They have an amazing balance sheet. I think their business in the near term is going to take a hit, but long term, I don't think you'll have anything but goodness with investing in Google. Next is FXNAX. This is the total market bond fund. As you'll notice, this has gone down. It was around 50,000, a little over 50,000 when I did the video on January 21st. And the reason is I've been employing the strategy of, now that we've had this significant pullback in the market, I've been reducing my bond funds, my bond holdings, and investing into some of the underpriced equities that are out there. One of my favorite YouTubers is doing the same thing, Joseph Carlson. If you don't follow him, you should definitely follow him. He's doing something essentially the exact same thing, but I hold, at this point in my life, I hold bonds in my portfolio in order to preserve value, specifically during downtimes, and they've done that job for me. So I've pulled back, you can see here in this fund, I've pulled back about 40% of the holdings and redeployed them into equities. And if the market, right now the Dow is I think it's just below 21,000. If the Dow gets below 20, 19, 18, etc., I may exit completely out of bonds, but right now I'm just systematically pulling some money out so I can dollar cost average into some of these underpriced equities. Next is LQD. This is another one that has been reduced slightly. It actually held up its value pretty well over the last 2.5 months. I've pulled about 5,000 or 6,000 out, and been buying some equities with it. This is my corporate bond fund. And again, if the market continues to drop, I'm probably going to continue to systematically pull some money out of LQD and buy equities. This is BRLIX. This is the one mutual fund in my portfolio. Honestly, I'm just kind of holding this one out of sheer laziness at this point. It's one of the very few holdovers from my corporate 401k. At some point, I'll probably back out of it and buy some targeted equities. But that being said, I do like the holdings in it. It's Visa, Amazon, Apple, etc. It has a lot of really solid companies. So for the time being, I'm just sitting on the BRLIX holdings. Next, we have J&J. I'm kind of kicking myself for not buying into more J&J when they were below 120. They're a bit over 130 right now, so I was a little tempted to buy in when they were in the 120s. I didn't do it. If they get below 120 again, if we have another indiscriminate pullback, I'm definitely going to be buying into J&J. Then I have SPHD. That's the S&P High Dividend Index Fund. And then BNDX, this is a total international bond index fund. This is another one. I've pulled back on funds a little bit. And even though that I've sold probably about $5,000 worth of BNDX, the holdings right now are right where the holdings were when I published the video earlier on January 21st. So again, you can see the bond funds have done a great job holding their value during this downturn. And and I'll do a video on this in the future, but once the market turns around and equities take off again, I like to buy bonds when the market is roaring, etc. And then I like to sell them when the market is tumbling. That way you can buy equities at a better price. Next is AT&T. Haven't done much with AT&T. Their holdings, their value has dropped pretty significantly. I had about 29,000 worth when I did this video in January. I'm not letting that shake me. I still believe in AT&T long term. I haven't been buying into them. I'm just a more fundamental believer in Verizon's business model for now. I like how focused Verizon is on the network and 5G. That being said, with AT&T sitting below 30, I may buy in a bit. There are just some other dividend stocks that I'm more focused on at the moment. And then the last stock here on page 1, I have just under 20,000 holdings here, is FZILX. Again, this is my international stock index fund. If you remember to my past video, I had about 50,000 in holdings at that time. I sold off about a little under half, about 23,000 worth to reinvest in other equities. And then the other decrease has just been with the market. International markets have gotten hit pretty hard. So for the near term, I'm holding on to this fund. I want a little bit of international exposure. That being said, once I get the rest of my portfolio built up to where I want it, I may start selling out of FZILX just so I can begin to get more focused with my holdings versus holding an index fund. All right, on the next page, the next holding, we have Realty Income Corp. I think they were my number 10 holding last time, and now they're number 15 in my portfolio. I think I had over 31,000. So REITs have taken a significant hit. I think Realty Income Corp is as solid as any REIT out there. And they have a lot of very solid tenants, think like Walgreens and Dwayne Reed, etc. So I think long-term Realty Income is going to be fine. I would like to add more, but right now, all I'm doing is I'm reinvesting Realty's dividends into the holding. So monthly, I'm buying a few shares each month with my drip on Realty. Next is Disney. Disney's another one that's taken a hit. I've just sat pat on Disney. I think I maybe bought in $500 worth at one point when they were in the low 100s. Long term, I have no doubts about Disney's business. Near term, I don't know what to make of it. That being said, I like my stake in Disney right now. I like the weighting they have in my portfolio. So I'm focusing my incremental investments elsewhere. FREL, this is another real estate holding that's gotten hit. It was around 22,000 in my portfolio when I did this video in January. I've only reinvested dividends. I haven't put any new money into FREL. So it hasn't gotten hit as hard as Realty Income Corp, but again, like most REITs and pieces of real estate, it's not performed well so far. Skyworks, this is one I've been building into. I'm actually down on Skyworks. I started buying in when it was in the mid 110s, maybe around 115. That being said, I've been continuing to buy in as their price drops, and I'm going to continue to do so. I want to build out a healthy position in Skyworks because I think, kind of like Verizon, I like Verizon's play for 5G, but I see Verizon as a more stable play on 5G. I see Skyworks as a nice growth opportunity with 5G. I think that stock's going to take off once the 5G phone super cycle takes hold, and the autonomous driving, the smart cities, and all the other applications for 5G begin to take hold. So Skyworks is one I'm going to be continuing to build out, especially if it gets down into the 70s, which is very close to, and even the 60s again. Next is Zoom. I've just sat pat on Zoom, and it's been a nice little holding for me. I thought about selling out when it was up around the 140s, 150s. But then you started hearing rumblings that Zoom could be a buyout candidate. Amazon might buy them or someone else. And so if you remember, like LinkedIn, when Microsoft bought them, their stock literally doubled. And so I'm holding on to Zoom for the time being, even though I do think they're overvalued and they're kind of getting maybe a little bit too much positive hype with all the zeitgeist around work from home right now. But I'm going to hold on to Zoom and see what happens with this one. Altria, these are my holdings on Altria. I bought into a little bit. I still believe in this company long term. I don't think there's going to be amazing growth with Altria, but right now you're getting their dividend over 8%. So it's really, really hard to go wrong with Altria, in my opinion. Costco, again, this is another one, really solid company. I bought them in right around the price they're at now. And I remember feeling that they were a bit overvalued when I bought them, but they were just a good company that I wanted to add to my portfolio. And they're another one, kind of like Amazon. They've had a critical role to play in our society during this pandemic. And so their stock price, it has taken a hit, but relative to the rest of the market, it's held pretty strong. AbbVie's taken a hit, but I have no doubts about AbbVie. I'm going to continue to hold on to them and their solid dividend. I have not been investing more in AbbVie, though. This is Google, G-O-O-G-L. I have been buying a little bit of Google. I'll do a video for you guys in the near future about what I've been buying into and give you some specifics with numbers. Archer Daniels. This one, I bought this as just sort of like the solid company within the food category. I still like them, and they're at lows. I have not been buying into them, but I might. As of now, I've just been reinvesting the dividends at these low prices. Wells Fargo, my banking holdings have taken a hit. I owned Wells Fargo and Bank of America coming into this. I'm riding it out. I'm not selling my banking holdings. I think banks will be back. This portfolio I'm holding for the very long term, i.e. the rest of my life. So I have no doubts about Wells Fargo long term, but this is one that I bought in, I think, around the high 40s. So the return has not been great on Wells Fargo. Same for Bank of America. Ditto. And then Duke. I've been buying into Duke as it gets below 80. That was another one, kind of like I was kicking myself for not buying J&J when it got below 120. Duke was below 70 for a while, and I kicked myself for not buying in. So I'm buying back into Duke in small increments because I just think they're a solid play. I look at Duke the same way I look at Verizon and a few others. I think with my tech-heavy portfolio and adding growth stocks like Skyworks and holding on to Zoom, etc., I like to balance that out with some solid foundational companies as well too, like Duke and Verizon. And then the last stock on this page is JP Morgan. I've been wanting to add JP Morgan in my portfolio for a long time, and now that prices are getting beat down, I've seen this as my opportunity. So it wasn't in my portfolio back in January, but I still think overall they're the most solid bank you can have in their portfolio. Now, yes, banks probably are going to be in for some risk over the near term, but again, that category long term, I have very, very few doubts. And let's go to my last page. These are just some of my smaller holdings here. 3M, same amount of holdings, just been reinvesting dividends. They've taken a little bit of a haircut. I think their growth is going to be stagnant over the near term as they recalibrate their business. But I like the income, and I still think they're a solid company. Next is LTC. This one has been beat up, fairly significantly. This is the senior living REIT, so like most REITs, it's getting beat up. And then I think senior living REITs in particular are facing a difficult time right now with the pandemic. But as of now, I'm holding on to LTC and reinvesting dividends. Here's Revolve. This is one I from watching Jeremy's channel on financial education. He got me interested in Revolve, and I looked into it, and I think this is kind of like Zoom and Skyworks, etc. This is a bit of a riskier growth play. But again, I think I need to have a balance of solid foundational stocks and then some riskier growth stocks. So this is one of my sort of like risks that I'm taking. And I would actually like to build out my position a bit more in Revolve. Albemarle, this has been the play on lithium. It seems to go up and down in tandem with Tesla. It was very high for a while. Kind of come back down to earth, but I'm steadily holding on to my Albemarle holding. It's my only material stock as of now. Annaly Capital, this one's gotten beaten up. This is the mortgage REIT. Again, I hold this one for equity. I don't reinvest the dividends, so I take the equity that I get every quarter from Annaly and I reinvest it into other dividend producing stocks that I'd like to add to my portfolio. And by the way, they just announced that they are paying their full dividend for the next quarter, which surprised me. We'll see after that, but at least for the time being, they're staying true to their dividend. CCL, this one I took the risk of buying into a falling knife, which I kind of did to a degree. I just think prices on CCL are so low. I look at my CCL holdings right now similar to crypto holdings. I own a little bit of Ethereum. It's the type of thing that it could go to zero. CCL will go to zero if they go bankrupt. But if they avoid bankruptcy, I think over 5 years there's going to be a nice solid return on these holdings. So it felt like a reasonable investment to make at a small level just to kind of see what would happen. Visa, kind of like JP Morgan, Visa is the other new one that I've been buying into during this pullback, and I'm going to continue to do so. I would like to build Visa up to a fairly healthy level, kind of to that $20,000 to $25,000 range. Kind of put it on par with J&J and Realty Income Corp when it's at its healthy levels, etc. I would like Visa to become a solid foundational stock in my portfolio. This is just a little fade the Dow thing that I've been doing for the very short term. You can see I'm doing it with a very small chunk of money. This is just kind of something I'm doing as a test, to be honest with you. So no need to talk about this a little bit. This is a short the Dow stock fund that I literally put a little over $1,000 in. So I've already made almost $400 on it in the very near term, but we'll see what happens. Again, 10 cent. I haven't built up my 10 cent holdings since I did the original video. I've just had other places where I've wanted to put my money, but at some point I would like to invest a bit more into 10 cent. Maybe get these holdings up to 7, 8, 10 grand. Pepsi, been continuing to build out Pepsi in very small increments. This is one when their price gets below 120 again, which it's very close to doing, or even below 115, I'll probably buy in more aggressively. Pepsi is another one like Duke and like J&J that it got very low and I wanted to buy in and I didn't. So it's kind of kicking myself. So again, Pepsi is one of my most targeted stocks in my retirement portfolios where I can incur dividends at no tax. And then lastly, this is the third new one I've been adding to my portfolio in small increments, Lockheed Martin. I just want to diversify my holdings a bit in the industrial space beyond just 3M. So I've been starting to buy into Lockheed Martin. Now, I bought in around the low 330s, and they went up pretty quickly. So they were actually below 300 for a while. So I think once Lockheed gets back around the 330 and lower range, I'm going to continue to buy into them. So it's really been Lockheed, JP Morgan, and Visa are the new stocks I've been adding to my portfolio. And then I've also been adding more to current holdings that I really like. So I'll do another video where I go a bit deeper on that. I'm also going to link the video from January 21st down below if you just kind of want to do a little look and compare, and we'll go from there. I hope you guys are all doing well and staying safe during these times, and have a great day. Bye.